Hello, everyone. Welcome to another edition of our More Than Market series. My name is Shalon Williams, Director of Investment Management Services here at NEI Investments. So last week, John Bay spoke about the flattening or the inversion of the yield curve and what that meant in terms of a recession. Today, I'll pivot a bit and speak about some interesting developments that we're seeing in the renewables space. So over the past several months, we have seen a notable increase in energy prices. And maybe just to set the stage, as economies restarted from the lockdowns associated with the pandemic, we saw persons getting out again, going out, transportation started to normalize. But then with that, we entered a situation where energy supply was constrained relative to demand. Now we layer on that the fallout impact of the Russia-Ukraine crisis and what that has meant in terms of notably higher oil and gas prices. And what the crisis has really highlighted is our energy vulnerability. So energy security is expected to be a big theme this year. It's going to be a huge theme this year. A lot of countries are looking to tackle those vulnerabilities and rapidly become more independent in terms of their energy choices. We're seeing where policymakers are now accelerating efforts to ensure that there is secure and sustainable energy. For example, in March, the European Commission proposed an outline to make Europe independent from Russian fossil fuel before 2030. And that's starting with gas in light of the Russia invasion of Ukraine. The plan is called Repower EU, and it sets out several or a series of measures to respond to the rising energy prices in Europe and to replenish its gas stocks by next winter. And as you may know, in Europe, we have been seeing increased energy prices for several months, but now uncertainty on supply is really exacerbating those problems. So Repower EU will seek to diversify gas supplies, speed up the rollout of renewable gases, and replace gas in heating and power generation. And that is expected to reduce the EU's demand for Russian gas by 2/3 before the end of next year. A critical part of this plan that I want to point out is that it includes quickly reducing the use of fossil fuels in homes, in buildings, in industries, and the power system by increasing renewables and electrification. So what the plan is really talking about here is rooftop solar panels to reduce dependence on fossil fuels, making homes and buildings more energy efficient, and also just generally decarbonizing industries and supply chains. And if we step back a bit and probably expand the conversation beyond oil and gas prices and really look at climate action, we're seeing countries such as Canada now taking serious steps towards their climate goals. Under the umbrella of climate action, an important part or important aspect of that umbrella includes investments in renewable projects like wind and solar. In late March, we saw where Prime Minister Justin Trudeau, he announced the release of the 2030 emissions reduction plan. And that plan really outlines ways to get Canada's new climate target of cutting emissions by 40% below 2005 levels by 2030. And that puts us on track in terms of our goal for achieving net zero emissions by 2050. So a lot of really ambitious goals. And in terms of how to get there, in terms of how do we get to that 2030 goal, the plan sets out $9.1 billion in terms of new investments to cut pollution and to grow the economy. So we're talking about making Canada's grid even cleaner. We're talking about reducing oil and gas emissions and really greening homes and buildings. And that's just to name a few of the plans that are geared at helping us to get to that 2030 goal. And in terms of funding, we also saw in March that the Canadian government issued its first green bond. The goal here is to accelerate and to fund Canada's green transition. So the programs that are eligible to be funded are those that will increase Canada's renewable energy production, deliver significant environmental benefits, including lower greenhouse gas emissions and expanding our clean transportation system. So we really think that the writing is on the wall, that clean energy transition is here to stay. Moving to a sustainable economy is a trend that is here to stay. The focus on renewable technology is a trend that is here to stay. With that, it creates market opportunities for companies that are early adopters to this trend. And having portfolio exposure to clean energy, such as our recently launched Clean Infrastructure Fund, helps investors to align their portfolio with the growing opportunities that we're now seeing within the renewable space. And secondly, the fund provides a good inflation hedge. It provides good dividend yield, and also it's a low volatility fund. So with that said, thank you once more for tuning in. And I hope you found today's discussion very helpful. Watch out for our next More Than Markets edition next week. And as always, reach out to your NEI representative with any questions that you may have. Have a good one. Bye.